Hey everybody, how's it going? This is Sam from End of the Chain. I want to welcome you to this episode, and things are, I guess, pretty crazy in the world right now with everything that's going on with COVID-19. I spent this interview speaking with Andrew Akeys from Dharma Capital about that. Actually, we covered a lot about the virus and about what's been going on over the past couple of weeks. This was actually filmed on, recorded. This was recorded on one of the days when the S&P had a massive drop. I think it was living down. So there's a lot of volatility in the world. But I think what we got back at is that things are going to get better eventually. And the underlying fundamentals of a lot of the industry that I'm in and that Andrew's in as well too, they're strong still. I mean, they're nothing has changed beforehand. And so the fundamentals are strong. Sounding like Jay Powell. So that's going to wrap it up. I hope you guys like this episode. I liked it. We got into some deeper ideas surrounding ETH and kind of lead up over the next few years. So leave a review and a rating. Share this with your friends, family, anybody else. I'm recording from home, so you should maybe hear some baby sounds over the next few weeks. All right, let's hop into the episode.
Doing today?
I'm good. Yeah, I'm really good actually. Markets in turmoil, right?
Yeah, it's crazy. This is and we can talk about it on the podcast. This is different than fundamentals. This is Black Swan.
Sure, but okay. So I interviewed one of my favorite guests is a guy named Dave Callum, and he writes this year in review thing every single year, right? And one thing that has been consistent for the past 2 years is that equity valuations are at an all-time high, and they've been at an all-time high for a while, right? So the S&P has never been so overvalued in its entire existence. And, it only went up, right? We had that huge breakout.
10 year.
Yeah. Huge breakout at the beginning of the year. And I don't know. I mean, the market just needed something to signal the top. And so the 10-year bull market that we've been running on is over, right?
Yeah.
And I don't know. I mean, the thing that kind of scares me the most is looking at the bond yields, right? Is that the entire U.S. yield curve went under 1% the other day. That's the scariest thing that I've seen. I mean, more than the equity. I don't care about the equities, right? If you're looking at the bond yield and you're seeing that, I mean, that's apocalyptic end of the world stuff right there.
Right.
Yeah. And I guess we're like, today's the day that we're seeing it translated into crypto assets, right? With a 30% decline in ETH and like a 25 or 28% decline in Bitcoin.
Yeah.
So people are getting scared, and for good reason. It's all Tom Hanks' fault, right?
Oh.
So they canceled. I mean, they canceled the basketball yesterday. Canceled the NBA season. They canceled. They probably canceled the NHL season today, and the rest of sports across the United States. That's one of the big signals. So I don't know. I mean, European traffic's gone as well too. So
it's very interesting times. Where
are you based?
I'm based in Puerto Rico.
Oh, okay.
So right now, the good thing is this virus really can't exist in over 70-degree weather. And I'm not an epidemiologist, nor do I purport to be one. But one thing that I thought was probably the most interesting is kind of how the media is exacerbating these issues. There was a great image that showed media mentions of past pandemics, and it goes through SARS and Ebola, and the second largest media mentioned pandemic was 50,000, and we're already over 1 billion.
Oh, wow.
And I just think it's a credit to how the media machines have evolved with internet and podcasts and social media, and obviously, it, it, it,
But,
the
but this,
Rupert Murdochs of the world have to sell advertising, and it's literally on every channel every minute, and I do think it's a little bit of fear mongering.
I,
Um,
I don't think so. Right?
okay.
Because if it was fear mongering, it would have started. It would have started, 6 weeks ago when it broke out in China, right?
Yeah.
Because during that time period, everything was fine. Well, I mean, at least the media was saying everything was fine. But I don't know if you saw those videos of China where they're welding people inside, like
Yeah.
people that are tested positive for the virus. They're literally bringing welders to their apartment building and locking them inside with no time period given when they'd be unlocked, or any idea about how they would get food or supplies or water or anything. Just that when I saw that, I was just blown away. That kind of like raised the hair on the back of my head.
Mm.
And I don't know. I mean, I'm in Florida, right? So I'm down south here with you. So
Mhm.
I know there's been a couple of cases in Florida so far,
Mhm.
but I, it's not. I mean, from what I read, right? It's the difficulty is going to be in the ability for hospitals to take care of everybody,
Mhm.
and so people, one of the contributing factors to how serious the virus is obesity and also heart problems as well too. And a large portion of Americans above the age of 45 are obese
Yeah.
and have heart issues. And so if we only have like 2.8 beds per that 100 citizens in the United States.
Wow.
That gets filled up pretty quickly, right? And at that point, the hospitals essentially have to choose who lives and who dies.
Yeah.
Yeah. So if you're showing symptoms but you're not on like a ventilator, they're probably going to turn you away and they're probably going to tell you to go home.
Mm.
That's the scary thing, right?
All right, fair enough. Fair enough.
Yeah. Because the death rate is higher, the infectivity is higher, but the thing that I've kind of read over and over and over again is that it's um, it's not that, it's the amount of people who have serious uh, effects from getting, or like there's serious side effects from getting infected, right? So that rate is like in the 10 to 20% range,
Mhm.
which is incredible. And if you think that 70% of all Americans are going to get infected over the next 6 months, and then that's what, like 200 million people, and then 10% of those are going to need to be hospitalized for 3 weeks.
Mm.
So it's like 20 million people, and we just don't have the hospital beds for it.
Yeah.
So yeah, crazy. So I don't know. I mean, probably the best thing Puerto Rico could do would be to just like shut off traffic,
Yeah.
close
Exactly.
close the airports.
Yeah.
Yeah. So I don't know. I mean, I mean, but so your like, how does this? I mean, has your market view changed over the past few days?
So has my market view changed over the past few days?
Right. I,
Yes. So,
yeah.
so I would say that I thought that you know so I guess there are two hats that Dharma wears.
Hmm.
We're a quantitative systematic fund, and we do a lot of modeling, just evidence based modeling, and so we basically chop the market into daily, weekly, monthly, quarterly, annual risk regimes,
Yeah.
and we look at those um, in the context of fundamentals,
Yeah.
and uh, everything on the fundamental side I'm extremely bullish on. I'm extremely bullish on the core stack. I'm
So you're like Jay
extremely
Powell. You're like Jay Powell. The American economy is strong.
Yeah.
The ETH,
Well,
the ETH is strong, right? The
yeah, but
protocols is strong.
I mean, so I would say that it just went through a 2-year bear market,
Yeah.
and corporate treasuries have declined, and uh, but a lot of very good building has been built, I would say, at the
Oh yeah.
protocol layer, at the tooling layer, at the application layer.
I
And
agree with
I
you.
honestly thought what the last 2 years really was building a moat. I am not yet sold on any other competing smart contract layer one. There are trade-offs. You could say things like Solana, but to me it really can't serve as a substrate
Right.
for the global economy, because it really needs to be inherently decentralized, and that's the trade-off that something like Solana makes. Sure, it can have more transactions per second, but there's what, 12 validators, 20 validators,
Hmm.
and really, I can just use a SQL database at that point. Um, so I have been very bullish and have watched the developer ecosystem grow, the investor ecosystem grow, the open source nature of Ethereum grow, the enterprise. What Ernst and Young, shot a fire across the bow at, I would say, all of the management consulting firms. Deloitte, KPMG, McKinsey, Boston Consulting Group, IBM, really anchoring their thought processes in a public permissionless substrate,
Hmm.
where they use baseline to really just validate that the two private permission databases are indeed true and accurate,
Hmm.
but they use the public mainnet Ethereum. I just felt that the fundamentals are so strong, but you have some Black Swan that takes ether into sub $100 again. Since that happened in the 2008 with liquidity crises. That doesn't help anything or anybody.
Hmm.
We thought 184 was a big level, and obviously it cruised through that. 130 was another big level. It pierced that slightly this morning. Um, it's rebounded slightly now,
Yeah.
but
It's 125 at the lows or something.
yeah, exactly. Um, but to your point, we this Black Swan will probably get worse before it gets better.
Yeah. We're
Um,
3 to 6 months. Yeah.
yeah, we'll see. But so if you've got 3 to 6 months, um, that's a long time, and we've just seen the destruction of the narrative of Bitcoin is digital gold, or frankly digital assets being any form of safe haven,
Right.
over the last year. And I mean it's interesting because not even gold's reacting well.
I mean, that makes sense. I mean, gold typically sells off. I mean, gold's an insurance clause, right? Is that no matter how bad things get, you always have gold to run to at the end of the day. But when things do get bad and you have a cash crunch, you can sell off your gold to move into equities or other positions that you have. Gold typically declines in recessions and other market declines,
Yeah,
and as it's supposed to, right? But what, it's only down. Oh wow, it's down almost 5% today.
yeah, exactly. I mean, it's legit. I mean,
Well, here's the thing, right? Is that the engine of the world has stopped.
yeah,
China, which uh, pretty much is responsible for the continued existence of all things globally, shut down for the last quarter and is continued to shut down. They say that everybody's back to work, but they're not.
yeah,
And you can look at traffic rates and the other kind of exotic measurements that people have been able to find to show that there is no rebound yet in China. people are still quarantined at home. They're not back to work. And this, I think, is again, when you have that kind of closure of the global economy, there's bound to be knock-on effects. I think this is a bigger issue than 2008,
Yeah.
because 2008 was limited to the banks, right? And most people didn't see um, I guess the carnage that was happening inside the banking structures, right? It was just between closed off private businesses, and then governments were trying to patch everything up themselves. But most people really didn't understand what was going on. This is a much more tangible fear, right? That people are going to have to deal with for the next couple months. And I think you're right. It is going to get a lot worse before it gets better.
So, what do you think is the appropriate fiscal and/or monetary policy from here on out for the next 3 6 months?
Oh man, that's hard to say, right?
I mean,
Because
that's a magic question. So, not to put you on the spot, but it seems like you've thought this through.
actually, I don't. I mean, I'm when the bond yields went under 1% the other day, I was shocked.
Yeah,
I To see the 30-year U.S. Treasury bond trading at like zero point 0.8 was just like incredible. I never thought I would see that
yeah,
in the next few years, but it went there, and it went there in a day. It declined like almost 40% in a day. So I don't know. I mean, I don't think anybody has any answers.
yeah.
And I don't think any amount of monetary stimulus or support will be helpful at this point. I think the only thing that can be done, like monetary stimulus, isn't going to do anything, right? What's needed now is a combined, um, like congressional response, like a governmental response to essentially do what South Korea did, right? In putting everybody into self quarantine, essentially shutting down the whole country, making it extremely easy to get access to testing kits. Um, the CDC's only tested like 5,000 people
Yeah.
in the entire country. It's just mind-boggling. I don't understand it. It makes no sense. I really don't know, and I don't think anybody has a clear idea of what's going to happen. And um, we can pump more money into the system, and I think this is the one thing. I know that people are probably really awash in cash right now,
Yeah.
but where's it going to go? I mean, it would like, are you
Well,
like,
well,
would you?
and that brings up kind of like the stagflation worries
Mm-hmm.
for me is that I've always thought, and call it libertarian or not call it anti-central banker,
Yeah.
that our $4 a gallon of milk will be $8 within the next 5 years.
Mm-hmm.
I think probably 5 years is a long time, but you get a group. Yeah, and the worst part about this is, all the systematic hedge funds, they were probably out in cash probably 3 weeks ago, and I feel like Main Street gets freaked, and this is where they lose lots of money,
Yeah.
where they go into cash positions down 30%, and you get some positive stimulus, or some indicator that there's a vaccine or something, and then the market rebounds 20%, and they basically lost 20% of their net worth because they were probably over leveraged as it was. Um, so this is, I worry about, the husband and a wife with 2.5 kids and the picket fence that's
Yeah.
living on $200,000 a year because they don't have the analytics and the research that sophisticated investors do.
Yeah. I mean, I'm like on just a base worry for people, right? The people that we've affected the most are, just normal people, right? All of a
Yeah,
sudden, these schools get shut down for 6 weeks.
yeah,
Like
yeah,
that
and
that in
and
itself, if you're working a minimum wage job, or just trying to get by, and all of a sudden you have to be at home with your kids now, like
yeah.
that could put you in bankruptcy.
Yeah.
I mean, I think these kind of things are much more damaging than we think about.
Yeah.
Uh,
And
I
lowering interest rates doesn't necessarily do anything. When you're talking about the minimum wage workers.
Yeah, for a company like yours, right? I'm sure everybody's already at home, or at least you're going to be thinking about moving everybody home.
We're already decentralized. We already basically our offices are in our mind.
Mhm.
We have weekly syncs, and then weekly risk meetings, strategy meetings. But for all intents and purposes, um, everyone already is working remotely,
Yeah,
and I think that will just exacerbate. This will just exacerbate uh, further evolution of the future of work and working remotely. I've heard extremes of companies getting virtual reality headsets for their coworkers and employees. Um, we're definitely not there yet. We find that we're able to sync via Zoom, and that's appropriate for now.
yeah. But so you used to be a Consensus, right?
Yes.
Yeah.
So
So
so yeah.
they've al- they've already canceled their New York event, um, or at least they have to be canceling now.
So I have not heard that yet. I may not be in the know of the event planning. I
Yeah.
know that Consensus with a U, the CoinDesk conference, is still technically on. And I haven't heard about Consensus with a Y's Ethereal, that's supposed to be a couple days before it.
At this point, I'm guessing that both are going to be canceled. You know,
Wow.
I'm. Well, think about it, right? So you have an outbreak, and there's already cases in New York. Um, the doubling rate is 5 days, right? So it took 2 weeks for Italy to go from 1,000 cases to 10,000 cases,
Hmm.
and if that's the uh, exponential kind of rate of growth, right? Is that you're going to go from 10,000 to 100,000 in another 2 weeks. I think that's where it starts to become really scary for lawmakers, right? And they just shut everything down. And you already saw that in San Fran, right? They banned any gatherings over 1,000 people.
Hmm.
Um, so I'm pretty sure New York's going to do the same, and all those conferences will get shut down.
Unbelievable. I mean, and just the follow on to the global economy from this.
Yeah,
Yeah.
I mean it's none of it. It's not. I don't think anybody could. Like nobody could have prepared for this.
Yeah.
Yeah. So I I think that I mean I'm I went to the supermarket the other day and they didn't have any toilet paper. It's
Jesus.
gone. It's gone. Um, there's everything else is there for now, but there's no toilet paper.
Really.
Apparently people think that's like the number one thing to go out and buy when you're going to be quarantined for a couple of weeks.
That's hilarious.
Yeah. So I don't know. I mean, I wonder if this has like what the so if this lasts 3 to 6 months and everybody's kind of at home, where and even when they take off the quarantines and start to let people come back to work, right? You're going to see flare ups until there's a vaccine that's created. Um, Man, this is just it's apocalyptic almost.
Huh. Yeah.
Yeah. I mean, so when it comes to like I, I don't know. Even across all asset classes, I'm at a loss right now to think about how a a, a global like a coordinated global drop in demand across all regions will affect all asset classes, and then how that plays into both monetary and fiscal policy as well too. Um, it's inconceivable.
Yeah.
Yeah.
I I just I guess the only counter to that
Hmm.
is looking, and I don't want to say anything negatively about China, but it seems, and I don't know if where I'm going to is the integrity of the data. It seems they've been able to at least contain this at this point, and infection reporting is going down from my
Right.
understanding.
But look what they
And
had to do.
yeah, but the United States is capital.
Yeah.
You've got a lot of very intelligent medical doctors, researchers, scientists, um, and at least we should be able to learn via some type of intermediary or third party like the World Health Organization
Yeah.
that's been helping China, and at least there should be a playbook. And I do think that you have the summer months coming up where this virus really can't live after 70 degrees.
Hopefully
Uh,
there's seasonality.
yeah, I
Yeah.
mean, if there was one year we needed global warming, this would be it. Um, but that's its own nightmare. That's its own black swan in and of itself.
So when it comes to, I guess when it comes to Web3, right?
Yeah.
I've been looking at some of the like, okay, so um, I want to buy a lot more Zoom stock
Okay.
because,
Yeah.
if this is 6 months of people working at home and using like Zoom and Slack and Microsoft Teams
Yep.
for everything, right?
Google Hangouts.
That should be a great stock to buy, right? Is there something similar in the Web3 stack that I should be looking at?
What I would say is, what we're learning right now is we're seeing Web3 protocols as what I would call risk on tech plays more than risk off flights to safety.
Hmm.
And from having helped build consensus and really having I would say pulse of where we are in the maturity of Ethereum. I think we're just still too young.
Yeah.
I think that there's still probably 100x left in Ethereum and Ether. Uh, this isn't investment advice, but I think that it's permeated less than 1/1000th of the world at this point, and I think that there's so much farther to go. But as you can see today, or you may see today, right now the pending transactions are about 120,000. Uh, I actually made a withdrawal from Coinbase today, and it still hasn't hit my public key, and that's 2.5 hours ago.
Wow.
And and the reason I'm saying this is that when thinking in a risk off environment like right now, uh, in investing in either the application layer or in part of the protocol layer, uh, I can't get comfortable with risk return at the application layer right now
Hmm.
because you still have protocol risk, meaning that I don't want to invest in the next Tesla or Ford because the roads aren't even built. And I think that you don't get paid for the risk that you're taking, that the protocols that the application layer is built on um, will finish in a certain amount of time, will finish without governance issues. We're
Hmm.
seeing the governance issues around things like ProgPow, and so uh, something like Zoom. In my brain, I put in like the enterprise SaaS or application layer for investment. And when I think about where the value accrued for Web 2, your Facebook, Amazon, Netflix, Google, uh, it, I would think that we have, similar to kind of the fat protocols thesis, we have a thinning at the application layer.
Yeah.
If blockchains really do work, you should basically move the value that's accrued from the intermediary to the counterparties of the trade. And I do think, and I do believe in the evolution of crypto commodities in different layers of the protocol stack. And we've done a pretty decent job of defining that stack
Hmm.
and applying kind of fundamental research tactics to it, and really looking into the smart contract layer, decentralized file storage layer. I'm very excited for Filecoin's launch. I think they have something like 17 petabytes of file storage uh, demand at this point.
Wow.
Um, so I think that will be interesting. But to really circle back to your question, um, I think Web3 in its entirety is a play on the future of work.
Yeah.
That we will go to a peer-to-peer decentralized web. We will have more of a gig economy. We will have more of a remote workforce. But if there was kind of one silver bullet, I mean, I think that you may be better with Zoom, even though I thought that their valuations were high, but now they're somewhat proving. But and then just a counter on that one, um, I'm amazed with Google's resources that Hangouts didn't eat Zoom's lunch, considering that a lot of people use the Gmail suite and Google Docs and Google Sheets, and I bet you right now there's a team in Mountain View that's figuring out stronger bandwidth to compete against Zoom. So I just feel like you're going up against a big tech company. Um, in Google from Zoom's perspective.
Well, let's take a step back. I want to talk about Web 2, right? So the companies that you listed, Google, Facebook, uh, maybe not so much Amazon, but a lot of these Web 2 companies have built their businesses on surveillance, right? So they track all of their user data, and then they use that to derive new products, not for the users who they're extracting
Yep.
data from, but for the advertisers and other people who other third parties who pay for that data that's being processed through Google and Facebook and other things. So my question for someone like yourself who's kind of singing the praises for Web3 is does Web3 actually break the this surveillance economy, and is it even necessary? Because I hear a lot about decentralized identity and all the other different uh, I guess positives of owning your own data that exist with Web3, but at the same time, I don't understand how the transition process moves away from the Web 2 layer where these companies are making trillions of dollars
Yep.
off of just extracting user data.
So, first and foremost, none of those companies are going to give that user base and that revenue away, and they will continue to do what they are doing and will continue to extract that value
Hmm.
indefinitely.
Right.
Um, for Web3 to work, even before, what I would say is I would say there's a small amount of who I would consider extremely intelligent computer scientists, economists, financiers, that venture capitalists that are betting and creating uh, an environment for the user experience of Web3 to be as good, if not better, than Web2.
Mm-hmm.
99.9% don't care about the difference, or really don't even know about the difference of self-sovereign identity versus logging into Facebook.
Yeah.
And if it takes extra time to hail your Uber, for a block to propagate, uh, and especially in times like this today, where you've got a couple hours, that user experience will not satisfy the what I would just say commercial users of the internet.
Yeah.
So first and foremost, the user experience has to be as good. Secondarily, the only thing that's going to nudge people from Web 2 to Web 3, in my opinion, is behavioral economic incentive. Something something like to your point, bond yields are 1%, but you're taking additional risk. You're taking smart contract risk. You're taking user experience risk. You're taking bearer asset risk, but you can get 8% versus less than 1% uh, in something like compound or make or die. And and until you create a Facebook where the user gets paid $1 a day to give their attention to advertising, rather than Mark Zuckerberg, you're not going to get that groundswell. And the other issue that I would say Web3 has for it, and I'm a believer, and I think that this is a 10-year play, and we're still in year zero of it, really, 10 more years. But those intermediaries, the Facebook, Amazon, Uber, eBay, et al., that are extracting that value, can reinvest that in advertising and continuing to seed their incumbency,
Mm-hmm.
and garnering more users. And if you take decentralized Uber and you compress the 35% that Uber takes to a couple percentage points, that's really open source software. Where's the value creation or the incentive for the application layer engineers to build a business? It's like almost building themselves out of business.
Well, I mean, for like Uber, right? I mean, they're not making a, a it's not a technology play, right? I mean, they're waiting for level 5 cars to come along so they can just build like own the fleet of the future and then rent them out to people.
Yeah.
Yeah. Um, I don't know. I mean, this is probably the most difficult question that I kind of wrangle with when kind of thinking about the transition from Web 2 to 3 is we have, a surveillance economy that's been built. People give up like petabytes, even more than that, like daily of metadata that they don't even understand to these companies, and these companies build algorithmic models about them and shove them into just different. I mean, they develop models about people that allow them to understand the person themselves better than they know themselves, and
Yeah.
make predictive value assumptions about them that they then can use to sell them products, or even like we saw back in 2016, drive them towards political actions, or specific actions in the real world.
Yep.
Yeah. So
I,
I'm and while I'm for, so I don't know. I mean, it's scary to think. It's scary to think that we put so much that we let so much power go away to these, you know, faceless corporations that have no oversight and no ability for, you or I to dig into their black boxes that they use to, I guess, analyze and process us.
agreed.
Yeah.
And there's a certain point where I say it, and I'll lump myself into it. Lots of people are stupid. Um, and lots of people don't have the ability to care for themselves, and I really do try to mean this in a humane way. Lots of people are paycheck to paycheck, and lots of people don't know any better. And uh, I worry that big tech is feeding off of that, and is doing so without kind of a code of conduct uh, that's needed to really be fiduciaries of the human race.
Hmm.
And I don't have that silver bullet. I don't think I'm perfect. I don't think Web3 is perfect. I don't think blockchains are perfect. But I do think that social media probably causes a cell phone addiction. In addition to the amount of money it makes off, where people, consumers of it, don't realize that they are the product to advertisers. Um, and I don't think that we, really, Facebook started what, 2004, 2005 ish. I don't
Yeah.
think we have the empirical evidence of what happens when you have a developing brain that's 17 years old that goes onto Instagram 100 times a day, or for that matter, a 40-year old in the workforce, and what that does to employee efficiencies. And I think that we'll start to see these types of, I would say, this type of empirical information studied, and those types of empirical findings happening. But really, there's no incentive to do that research right now.
Yeah. I guess coming back to the Web3 thing, I mean, one thing that really is a positive about it is, unlike the black boxes at Google and Facebook, Web3 is transparent. All of the code is out there, mostly, and it's open source. Anyone can come along and take a look at it and understand the processes that are happening, which isn't happening at Google, right? So you can have governance, you can have oversight in Web3, and maybe that is the long term factor that drags us away from these companies. But yeah, maybe it's almost like a shift in like a global reserve currency, right? The shift from the pound to the dollar took 50 years
Hmm.
to take place, to fully take place. And there was no, it was a slow and transitioning process where there was one no point, or where there was no point in the middle where you could say, oh, this is the point where we've switched from the dollar to, or sorry, from the pound to the dollar, right? So maybe with Web3, it's the same, where it just keeps growing and growing and growing, and all of a sudden, at 20 to 30 years from now, people just, it's just eclipsed. It's eclipsed everything else, and now it becomes the new normal. But there is no one place during along that time where you could say, okay, that was the end of Google, that was the end of
Yeah.
Facebook, right?
Right.
And maybe that's good, right? Is if it just seems to, if it keeps on permeating into the kind of general social consciousness, slowly, that's winning, right? People start to see the opportunities and the benefits of moving to these systems, and also it just becomes easier, right? So I work for Realty, and yesterday we had a call with Fortmatic, and they did a little walkthrough of some of their like new products that they have, and it's perfect for us because their newest system, you sign up using an email and you have no idea that you're using Ethereum,
Mm.
but all the Ethereum is taking, all like everything is happening in the back end. Like you can buy and sell assets. You could use like Wire or some other payment processor to move money onto the chain, but at the same time, the like a UI UX developer could design their front end so somebody would have no idea that they're ever using Ethereum. It's just that the asset would be kept there and it would, have its value retained on Ethereum itself. I thought it was really cool.
And that's that's kind of where I was going with, if the user experience has to be as good, if not better, than current Web 2.
Yeah.
And you totally have to abstract uh the token usage. It completely needs to be uh abstracted away. I mean, and you had kind of in the 2017 ICO boom and bust, there were companies that were just trying to log jam a token into an application, and that was kind of one of my first red flags of that time period. But I think that there is, and this is the moat that I was referencing. Notwithstanding a black swan, that the Ethereum community has been building over the last 2 years in this bear market.
Yeah. Well, I think for me, DAI is the moat. That can't be recreated. I mean, the Bitcoiners want none of it, and Ethereum has a head start in moving value on chain.
Yep.
And to do any of these services like you're talking about, if you're going to pay out stable payments to people, that they don't want an asset that goes up or down 30% in a day. And also, if you're a business, you want stable uh, expenses, right? And with DAI, you get that because people
So
love dollars.
I agree with DAI being a great first step. Um, the DAI interest rate now has fluctuated on Maker, uh, and compound from, it was 8 yesterday to 12.5% today.
Wow.
So if people are borrowing DAI, I don't think that lending market. So I agree that there has now been stable coins. I think that USDC has, because it's pegged 1 to 1, and I know it's not as decentralized, and I understand all of the issues with that, but people in the end will need US dollars to pay their rent for now.
Yeah.
And you can go into your Coinbase or into your, and I'm not here to preach centralized exchanges, but I think the one-to-one relationship between a US dollar and a USDC token,
It's amazing.
where there's not even a cost for that exchange, versus DAI, there's still not the liquidity. There's still not, even DAI to USDC, you lose 2-3% on transferring it.
Right.
So I think that
Well,
there's,
hold on. No, that's not true. We made money on our last transfer from DAI to USDC just because of the positive exchange rate for us. Um, so we went through Curve Finance. Yeah, we went through Curve Finance, and our fees were 0.3% on the DAI, and the DAI also had it was a little bit bid up, so we made like $20 on the transfer.
hmm. But you're not doing that with $100,000. You're not doing that
Uh,
with $1 million.
no, it was around. It was. I think it was around 30 or 40K, but very seamless.
Yeah. Okay.
But the USDC is amazing. That is probably the greatest thing that Coinbase has done in the last
Yeah.
year in 2019.
Yeah.
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 I
I agree.
It makes sense for them, right? Because as a centralized exchange, you're an asset gatherer. You
Yep.
just want to gather as many assets as possible, and for them to be taking in all these dollars and then issuing a stable coin on the back of it, right? I'm sure what they're doing is they're taking their dollar reserves and then just exchanging them to treasuries or something so they can earn at this point like 1.3% or something, one point, or maybe 0.8%. But that's good if you have $1 billion or a couple $1 billion that of user deposited funds that are now in USDC. It makes a lot of sense as a business.
Totally.
And so them offering the one-to-one exchange is great. It's great for us as a business because we can just move money into USDC through Coinbase Commerce as we're doing our sales, and then we can just take it straight out to our bank account. And these kind of fiat on ramps, I've been praying for a long time, and I'm sure that more exchanges are going to follow here in the next couple of years.
Agreed.
Yeah.
And I think it's the first out of the first inning on this stuff. We just need a good, stable economy to
Yeah.
let all the good building come to fruition, and we should be in a good shape.
I spoke to somebody who said that, like, the benefits of Bitcoin, right, is that you can, because when it's okay. So I don't consider myself any sort of protocol maximalist. I'm a liquidity maximalist. So I want, tight spreads. I want to move essentially back and forth between Bitcoin, USDC, or whatever other crypto asset for as tight a spread as possible, because the closer or the cheaper that you can make those transactions, the more possibilities they open up in providing, micropayments or other types of payments, which just may have been too expensive or beforehand, right? One of my previous guests told me about this. It was the international payment system of money going from, I think, South America somewhere to the United States, and the system was using Bitcoin to make those transfers, but people had no idea that they were using Bitcoin to make that transfer.
Mm,
And they were only able to do it is because the exchange rate that they were able to find and set up through whatever means they could was better than the international exchange rate of going from I think it's Peruvian pay, or maybe like a Chilean peso, to the dollar.
mm,
Uh, and the technological layer allowed them to do it much cheaper and offer better rates than everybody else.
mm,
Yeah.
mm,
I think that's the micropayments thing is interesting, right? Because if you can get if you can get the spread for Bitcoin down below a cent eventually, that's when things start to get fun, and it just opens up a world of possibilities of what you can do with the dollar and Bitcoin or Ethereum or anything else.
agreed.
Yeah,
Agreed.
yeah.
And I like how you put it, a liquidity maximalist. The only variable that I would just add to that, is that I have not seen. I think you want to embed the business logic. So I completely agree, the liquidity and the tight spreads, but you can't just have Alice send Bob value. To really make a material difference in the way society works, I think you need to have an if then else statement, where I think is probably poorly phrased as smart contracts,
Mm-hmm.
smart contract functionality. I've yet to see that happen in a layer two in any real working fashion on Bitcoin, and I do think that it is important to have that programmability.
Yeah. No, me too. And I mean, this is one of the kind of bull cases for Ethereum long term, right? Is that it already has that logic and it's being used in a kind of a nascent form right now. Um, and the things that are developed over the next 10 years, the benefits that are created through all the things the Ethereum developers are creating should bring in more liquidity, right? So it should naturally aggregate, tighter markets and deeper liquidity as the amount of things that are built on Ethereum grows. And I think this kind of goes back to the beginning. What you were talking about is that the fundamentals are great. People are building on Ethereum. The Web3 stack is great. We're getting towards ETH2, but it's just, we're in a Black Swan moment right now.
Yeah.
Yeah. Um, well, cool, Andrew. That's probably a great point to wrap up on. Actually,
Okay.
is there anything else that you want to, I guess, give a shout out to, or that we didn't mention?
No, I mean, I was mentally modeling to talk about blockchains and various layers of the stack, and I think that today is much more than blockchains,
Yeah.
and I think this is really looking at them outside of their own bubble.
Hmm.
And there's a lot more work to do, and it looks like there's a bit more persevering to do over the next couple months.
I 100% agree with you. Yeah. That's incredibly important, and also important just to start to look around. Take a break from the crypto markets and look around your community, see what you can do, and
Yeah.
what like the real people that you can help in your life.
Yeah.
So, well, great, Andrew. Thanks for coming on.
Thank you for having me, Samuel.
All right, it's going to wrap up another episode. Thanks for tuning in to the end of the chain. Stay safe, stay healthy. Don't get the COVID. I will be back with another episode in just a few days. We've got Dan Elitzer lined up from IDEO Collabs. So see you for that one.